I'm joined in the studio by Ralph Silva, Director at Silva Research Network. Ralph, thank you so much for coming in the studio. The UK is still trying to really find the best way to go about this. What is your favourite way? I know we've spoken about this before, and you've always told me, you know, they have to be prudent because they don't want to hurt the banks.
They certainly do, but I think there's a big conflict here, and what Sir John Vickers wants to do is actually protect the British banking business. The problem is we don't really have a British banking business. We have a global banking business that happens to call London their home, and that's a real problematic. And secondly, the Prime Minister realizes that the bigger the banks, the more control he has over the global money, the more people listen to him. So he's not going to want the banking industry to be reduced either. So there's a bit of a conflict between the two, and what comes out at the end is probably going to be more taxation for the banks.
At what level? Because I know we've also talked about this before. You say it's probably not best to go after the bonuses, but to go after the corporation tax.
That's right, and that's exactly what they're going to probably end up doing. It's going to be capital requirements are going to increase if a bank does the risky investment banking, or what they claim risky, and the retail banking. If you're going to do both, that's fine, but you're going to have to put in more capital. And I think that's a reasonable sort of medium for the banks to actually do, and I don't think they'll complain about it.
Ralph, how concerned are you? We're talking about restructuring possibly the Greek debt. How concerned are you that this will actually mean a very heavy hit for a lot of the European banks, especially German ones?
It will cause a very big hit, and I think that we're focusing especially on Spain, because Spain's probably going to see the biggest hit of this. But I think that overall, all the banks in Europe are slightly undercapitalized. There's about 5 or 6 banks that won't have very much effort to actually become capitalized, as Basel III requires, but the rest of them, they have to actually make significant changes to the bank to actually get to the point where they need to be.
What's the best solution today for the cajas?
The cajas have to merge. They absolutely have to merge. They're overly reliant on the mortgage business, and if property were to increase in value by 25% this year, everything would be fine, but that's not going to happen. What concerns me the most about the cajas is that Banco Santander and BBVA, which are doing extremely well, are not buying Spanish banks at a discount. They know the market best, and they're avoiding it, and we should all be scared about that.
So what needs to happen at this point? The government needs to step in and take over the cajas, or force the other two to buy some of them?
Honestly, I think what the government has to do is actually force merge at least half the cajas. They have to bring them together, and I think if you merge them, about 2/3 of them should be fine. But if you leave them alone, we're looking at least half the small banks in Spain actually having the possibility of failure, and that's unacceptable.
But we've had some disaster mergers here in the UK. Does it mean that actually the Spanish government needs to take hold of them and control them themselves?
That's the easiest way to do it. The Northern Rock situation. Pull out the bad assets, which in fact are mortgages in most cases, and then merge the rest of the organizations together. Unfortunately, the Spanish government doesn't have the money to do that right now, so it's going to have to be European money to do that, but I suspect that they'll be able to access that money to get that done.
Ralph, I know you've always told me actually be very careful of UK banks at the moment. Is there anything that you find more attractive, French banks, Italian banks?
Yeah, what Barclays is doing with their pay is actually something that's relatively attractive. Not because it's a bonus situation, but because it actually protects Barclays itself. If the value of Barclays goes down, they put more assets on it. So from an investment perspective, actually Barclays is looking fairly good, and I suspect the other banks will do the same.
Ralph, thank you so much. Ralph Silva there.